You know those trends where you either enter too late or get shaken out right before the real move begins? This tool is designed to reduce that problem by showing not only whether the market is bullish or bearish, but also where pressure is building and when momentum starts to cool off. On the chart, price is followed by a smooth line called the trend tracer. When this line stays below price, the market is in a bullish regime, and when it flips above price, the regime turns bearish, giving a clear visual read of direction. In addition to that, there is a wider and slower trail that represents the bigger picture trend. The inner trail reacts faster and helps time entries, while the outer trail confirms the overall market environment. When both trails point in the same direction, conditions are aligned and trends tend to be cleaner. When they disagree, it usually signals a transition phase where price can become choppy and less reliable. The band between these two trails visualizes momentum and extension. Darker colors mean price is strongly pushing away from the trail and momentum is high, while lighter colors suggest the move is losing strength, compressing, or preparing for a possible shift. You will also notice small arrows near recent swing highs and lows, which mark the first clean flip of the refined trail and serve as early warnings that the market regime may be changing. For a long setup, price first closes above the refined trail, the line flips bullish, and an up arrow appears near a recent swing low. Rather than chasing the breakout candle, a more controlled approach is to wait for a pullback into the trail and enter on the bounce. Stops can be placed below the swing low or just under the trail, depending on risk preference. As long as price respects the trail and momentum remains strong, the trade can be managed using the same line, with exits considered when momentum fades and the trail flips bearish. The short setup follows the same logic in reverse, with price breaking below the trail. A bearish flip, a down arrow, and a rejection on the retest. Under the hood, the tool uses a mid-range price basis derived from recent highs and lows, combined with two supertrend layers and an RSI-based stretch filter to display extension and exhaustion visually. The key settings are length and the ATR periods and factors, where lower values make the tool more responsive but noisier, and higher values slow it down for cleaner trend signals. One important habit when using this tool is to always think in terms of context rather than isolated signals. It works best when combined with higher time frame direction, basic market structure, and clear support and resistance levels. Used this way, the trend tracer becomes less about taking every flip and more about understanding where you are in the trend cycle, helping you stay patient during pullbacks, avoid chasing extended moves, and manage risk more consistently as the market shifts regime.